Ladies and gentlemen, Kay Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up about 0.6% on the S&P. Looks like Nasdaq and semiconductor continues to struggle a little bit here. Semi's down 2%. Nasdaq is negative. We did have a monster day on the Nasdaq and semi. They're breathing it easier today. Dow's up about 1.5%. Small caps continues to thrive to the upside, 1.7%. XLE, the energy sector's up 2.5%. The bank's up 2%. Grayscale Bitcoin is up a little bit here. Gold and silver popped a little bit. Dollar is down. VIX down about 5% there. Let's stick with the S&P 500 ETF. Spider 65-minute chart here. So there's a couple things I think is very, very important looking at today's price action. One, we have another gap that opened from this morning. So remember we talked about how this gap was important on the last night's video. That gap has not been touched. On top of that, we opened up another up gap today. So you can see we've got this gap open. Now we got this gap open. Another one that I can see that is very, very important is this falling resistance here. So we managed to break above it on the 5th hour. You see that candle there. And on the 6th hour, on the last hour, we came back down, currently in that retesting phase. So you can see that resistance, potentially a new support. We have support at 388, which is that gap area support. My short-term moving average is hovering just underneath this gap area. Keep in mind, my short-term moving average does have impressive resume in the short term because remember, it's been acting as resistance all last week. It flipped bullish this week on Monday, Tuesday, and we're just trading right here at 387 or so, or residing that short-term moving average. All of this gap here and the short-term moving average, this gap area is all gonna provide support. Things are looking more and more bright for the buyers at this point. Also, keep in mind that currently we have what I call equal highs. This is not a lower high. It's not a higher high either. But we have equal high. That means we're no longer in a downtrend. If anything, we can look at this as some kind of a consolidation phase, some kind of basing out period, some kind of a bottoming type of price action. Remember, for the downtrend to continue, bears needed to continue to cultivate lower highs and lower lows. They had a multiple opportunity to do that here and then like this. Or maybe even here and then like that. But with this micro term higher highs, which we've been covering last couple of days here, right? We got that micro term uptrend. And in the short term, we are in a bearish downtrend in the short term. But with this equal highs, I am no longer going to label the short term as downtrend. I'm going to label it as consolidation phase in the short term. So here is how the market is playing out right now. In the midterm, we're bullish. I've covered this on the weekend video. In the short term, when I say short term, you guys know what I mean. My regular viewers know what I mean. This is what I'm talking about, just what you see in this chart right here. In the short term, we're not in a downtrend. We're in a consolidation phase because of these equal highs. In the micro term, right? In the micro term right here, we're in an uptrend, right? Midterm uptrend, short-term consolidation, micro-term uptrend. Things are shifting here more and more each day goes by, especially this week. Buyers are gaining momentum. Buyers are gaining confidence as we start to cultivate these short-term higher lows and higher highs here. So going into tomorrow, if we do see a support right on this potential new support. We may see a support here at 389 or so in that vicinity before making its move back to the all-time high level. Or bears might want to come down, fill this gap first. Remember, when the gap gets filled, it's going to act as support. Not to mention, we have a very strong support in the short term, that short-term moving average here. Why? Because that short-term moving average, we hit that. This was what? Monday, right? This was Monday. And next day, we saw about 1% gap up just right on that short-term moving average. It's likely there's a lot of buyers want to accumulate in this vicinity if we do see a slide going into tomorrow. This level act as support, and 380, 889-ish act as support. There could be a support in that vicinity. I think it will be better for the buyers if they can keep this gap open. If we look at this as a breakaway gap, this is going to be a continuation gap. If they want this short-term buying pressure, the buying momentum to continue, it will be better if that gap remains open, but it won't be bad for the buyers if this gap gets filled, because this gap remains open. I talked about on the last night's video that bulls make sure to protect this one. This one's going to be an important gap that they protected. So now that we got this gap open and the short-term moving average in that vicinity and the, that declining pivot that could potentially become new support, I think we have a lot of support in that vicinity to provide some sort of shield should the price decline going into tomorrow. Let's check out that oscillator here real quick. So we talked about this yesterday, right? What bears wanted to see is bears wanted to see this thing just curling back down and coming right back down, not moving sideways like this, because moving sideways essentially is some kind of a buyer's the buyers are being adamant to come back down, right? Something is changing, some sort of shifting in that trend, in that momentum. Buyers are no longer just getting into that overbought level and pulling back. Buyers being adamant, staying on that ground and staying put. Letting the oscillator reset a little bit, potentially trying to get up again, making its run here, and that's what the sideways move is advocating today. So let's see how the market plays out. You guys enjoy your evening and good luck trading tomorrow.